You know, sometimes you just gotta laugh at the financial news, right? Like this week, everyone's losing their minds about the Fed suddenly being hawkish.
Oh, yeah.
Yeah, just because they hit pause on raising interest rates.
Right.
Like that's all it took.
Yeah. Well, if you look past the headlines, though,
Yeah.
and actually read Chair Powell's statement
Yeah.
and his comments from the press conference,
Uh-huh.
it paints a very different picture.
Yeah. That's what we're going to do today. We got a whole stack of articles and analyses here, and we're going to deep dive into what's really going on,
All right.
what Powell actually said.
Sounds good.
Cut through the noise and figure out what it means for, your money.
Absolutely.
So one of the biggest things people are freaking out about is this phrase that the Fed removed from their statement, further progress on inflation. Like that was in there before, and now it's gone.
Right.
And everyone's like, oh no, the Fed's not happy with how inflation's going anymore.
Yeah, the media jumped on that.
They did.
Before, when that phrase was in there, it was like a sign that the Fed was, pleased with how inflation was coming down.
Mm-hmm.
But taking it out made everyone think, oh, they're going to hike rates like crazy to fight inflation.
So basically everyone's saying the Fed's gone all hawkish.
All right. Exactly.
But for those of us who aren't fluent in Fed speak, what does that even mean? What does hawkish really mean in this context?
Well, it basically means that the Fed is super focused on fighting inflation.
Okay.
Even if that means maybe slowing down the economy a little bit.
So they're willing to kind of slam the brakes on things to get those prices under control.
Yeah, exactly.
Oui.
A hawk protecting its nest.
Right.
They'll do whatever it takes to keep those threats away.
Okay, so everyone panicked when that phrase vanished because they thought the hawk was about to attack with more rate hikes. But then we had Powell's press conference, and that's where things get interesting.
Totally. I mean, Powell actually said that inflation is still moving towards that 2% goal. And he said housing costs are easing up.
Which is huge. Housing has been public enemy #1 when it comes to inflation lately.
Oh, absolutely. Housing has been a massive driver of inflation.
Yeah.
So the fact that Powell's is acknowledging that, things are cooling down a bit on that front, that's actually a really good sign.
Yeah.
It suggests that maybe all the Fed's efforts to fight inflation, they might actually be working.
Okay. So maybe not the fire-breathing hawk everyone was expecting.
Yeah.
But what about the labor market? Powell said some stuff about that, too, and it seems pretty important.
Definitely. It's all connected, you see.
Okay.
Powell mentioned that the labor market is stabilizing, and that plays a big role in the whole inflation story.
How so?
Well, think about it. If the labor market cools down a bit,
Okay.
it means wages aren't growing as fast.
Makes sense.
And if wages aren't growing as fast, people have less money to spend,
Right.
which should help to keep prices from rising too quickly.
So a stabilizing labor market actually kind of helps fight inflation?
Exactly. It suggests that we might be getting to a point where inflation can keep moderating, coming down, without the Fed needing to be super aggressive with those rate hikes.
Gotcha. Okay. So that's good news, I guess. But then there's this other thing Powell said about interest rates being meaningfully above the neutral level.
Right.
Now, hold on. Before we go any further, can you remind us quickly what that neutral rate even is? Why is it so important?
Of course. So the neutral rate is like the sweet spot for interest rates.
Okay.
It's the rate that neither pumps up the economy too much nor slams on the brakes.
Mm-hmm.
It's the rate that keeps things kind of balanced.
Got it.
And the Fed is always trying to hit that sweet spot.
But it's like a moving target.
Exactly. It's always shifting depending on what's happening in the economy.
So what's Powell saying when he says rates are meaningfully above neutral?
He's basically saying that the Fed's policies right now, they're putting the brakes on the economy to try to cool things down and bring inflation under control.
And that's why everyone's so obsessed with whether the Fed's going to cut rates.
Mm-hmm.
Because that would signal that they're ready to ease up on those brakes a little bit.
Exactly. A rate cut would mean they're trying to move back towards that neutral level.
Right.
Give the economy some room to breathe.
Okay. Starting to see the bigger picture here. So the Fed paused on rate hikes. But based on what Powell said, it seems like they're being a lot more cautious than those hawkish headlines made it sound.
Yeah, totally.
Yeah.
There's a lot more nuance here than people realize.
A lot to digest, for sure. And the markets, well, they're still trying to figure out what it all means. Which brings us to the big question for you, dear listener. What does a less aggressive Fed mean for you? Your money. Your investments.
Yeah.
That's something to think about as we dive deeper into all the implications of what Powell said.
Definitely lots to unpack there.
Okay, so we've got this maybe less aggressive Fed. Inflation's cooling down a bit. The labor market's stabilizing. But what does it all actually mean for our wallets.
Right.
What about the S&P 500?
Well, the stock market, it loves a good story.
Mm-hmm.
And right now, it's trying to figure out what the Fed's next move is.
Okay.
Like, are they going to keep hitting pause on those rate hikes?
Yeah.
Or are they going to start cutting rates at some point?
And that uncertainty can make things pretty volatile, right?
Oh, yeah, for sure. Like, we saw that initial dip when the Fed statement came out. Everyone kind of freaked out.
Right.
But then stocks rebounded when Powell's comments came out, and everyone realized, oh, maybe it's not as bad as we thought.
So it could be a bumpy ride.
Yeah, could be. But remember, the market's always looking ahead.
Okay.
It's not reacting to what's happening right now, but to what it thinks might happen in the future.
So, for those of us who are in it for the long haul, we shouldn't sweat those short-term ups and downs too much.
Exactly. Stay the course.
Easy to say, harder to do.
Oh, I know. Especially when you see your investments bouncing all over the place.
Seriously.
But that's why it's so important to have a plan. You
Yeah.
know? Like, what are your investment goals? How much risk were you comfortable with? And is your portfolio diversified?
Don't put all your eggs in one basket.
Right. And don't make any rash decisions just because, the headlines are freaking out or the market's having a bad day.
Yeah. And if you're feeling lost, talk to a financial advisor. They can help you figure out a plan that works for you.
Definitely. Good advice.
Yeah.
Now, going back to Powell's comments about the neutral rate for a sec.
Yeah.
You explained it earlier, but I think it's worth repeating because it's really key to understanding where the Fed's at right now.
Okay, remind us.
So the neutral rate, remember, it's that theoretical interest rate that doesn't speed up or slow down the economy.
The sweet spot.
Yeah, exactly. And Powell said that current rates are meaningfully above that neutral level. So that means...
they're hitting the brakes.
Exactly. They're trying to cool things down.
And the market's basically trying to guess when the Fed's going to let up on the brakes and cut rates.
Right, because when investors think rate cuts are coming, it can really boost stock prices.
Yeah. But what if they overdo it with the cuts?
Oh, yeah.
Like, what if they cut rates too much and inflation comes roaring back?
That's definitely a risk. It's a tough balancing act for the Fed.
Yeah.
You got to bring down inflation, but they also don't want to crash the economy.
It's like walking a tightrope.
Totally.
Yeah.
And they're making these decisions with all this complex data and, there's a lag between what they do and how it actually affects the economy.
Not an easy job.
No kidding.
Yeah.
But everyone's watching them super closely.
Uh-huh.
Investors, economists, regular people just trying to make sense of it all.
It's a big deal.
Oh, yeah, because their decisions affect everyone you know.
Yeah.
Mortgage rates, business investments, job creation, the whole thing.
So we've talked about the Fed, interest rates, inflation, the stock market, and the neutral rate.
Right.
What's the main thing our listeners should be taking away from all of this?
I think the big takeaway is that we're in a period of transition. Things are changing.
Okay.
And there's a lot of uncertainty about what's going to happen next.
So what should people do with that information?
Well, the best thing to do is just stay informed, be patient, and don't overreact.
Right.
If you're invested in the stock market, remember, it's a long game. Don't let those daily headlines freak you out.
Good advice.